Hi, good morning, and welcome again to another edition of Market Analysis for today, March the 17th. I'm Giovanni Betancourt, analyst, trader, and educator with Vantage Markets. Now, there is a sign of beware today. Today is the triple witching, where stock volatility could rise. Besides being St. Patrick's Day, today is also the so-called triple witching day, one of the four times a year that stock options, stock index options, and stock index futures contracts expire on the same trading day. It usually prompts a flurry of trading, which can lead to extra volatility. Triple wishing days occur on the third Friday of March, June, September, and December, and the market historically do not end in the green. This may amplify what is already a volatile market. It expects market expects that about 500 billion in puts, the right to sell a security, and 300 billion in calls, the right to buy, are to expire today, and that could obviously put pressures on stocks also. So historically, data back that up. On triple wishing days over the past 5 years, the Dow Jones has slipped 0.65% on average. The S&P 500 has fallen an average of 0.6%, and the Nasdaq has dipped 0.4% according to Dow Jones market data. Separately, next Wednesday, contracts tied to Wall Street's fear gauge, the CBO Volatility Index or VIX expire, which is likely to add volatility to markets. It also coincides with the Federal Reserve's next decision on interest rates due out that afternoon. Now, we have finally saw a nice trending update yesterday, in yesterday's sessions. There were no major stops that contributed to momentum, just plain simple trend based on underlying conditions and supported by a risk on sentiment, which came after fellow regional banks came forward to support the next failure in line, which was First Republic, in the line of $30 billion. Obviously, Bank of America, CD, JP Morgan, those big guys. The futures market could be sideways to a gradual grind up today, and such conditions usually follow a nice trending day. But if it wasn't the triple wishing day, so that could put up a through a monkey wrench in your trading. So if you are short term CFD market participant, focus on on the trading regular trading hours, and that will be your most reliable guidepost. So we begin by pointing out to you the direction of our levels. The E-mini. Let's talk about the here the Nasdaq. So if we happen to have some volatility to the downside, that 1244.88 should hold. So therefore, finding support, finding a rally to come back and take it as far as 12,800 perhaps, okay? And if that's broken, then we could probably revisit that other high on the at the beginning of February. That's for the Nasdaq. As far as for the S&P 500, the 3941 should hold and then find some buyers around here to make the take the market up about 4,000. That psychological level. If that does happen, then we could probably have a second target of 4028. But that's a big if. That's a big if. As far as for the Dow Jones, 32,102, that's a support level. We could probably come and find some support buyers and take the market at least to reach out yesterday's high and move even higher. Okay, and then crude oil is looking to stay, flattish. I think, I think around the $68, just trading below it and above it. Really, really, really waiting for a lot of more news to come out. But I see that happening. I don't see much more fluctuation to the downside unless something more exponential happens. Then we have natural gas. I'm looking at nat gas to be 235 and find a support there and just really stay in this narrow range. As far as gold goes, gold is on a parabolic movement. We are looking to break this 1950. If we do happen to break the 1950, another resistance will be the 1960 level, 1959 level. And if that happens to be broken, then yeah, 1970, 1980 will be the case. But let's see what happens. As far as the silver goes, silver $22 is where I see silver staying around that level, fluctuating to the upside and then just retracing. But I don't, yeah, I'm looking at silver to stay in this range, in this tight range, dollar range. Then we have copper. Copper, I'm very optimistic about copper to continue to is is movement. We have an inverted hammer here, so that could help us change direction of the market and take us back to $4. Then we have here Bitcoin, nice pop to the upside. Is it kissed, kind of kissed 27,000, and it's retracing from the probably profit taken. Then we have the currencies. 106 is the level of support for the euro. It fluctuated above 106.50 and is quickly retracing. Let's see that pullback will find more support. As far as the pound goes, 121.50 is that initial target, and then the second will be 121.750. And that could happen if the dollar index continues to fall and reach 103.5. Well, that's it for me today. Have a fantastic Friday and weekend. I'll see you on Monday. Bye now.